What is carriage and insurance paid to, CIP, and how do you use them? CIP, or carriage and insurance paid to, is an Incoterm where the seller is responsible for delivering goods to an agreed destination in the buyer's country, and must pay for the cost of this carriage. However, the seller's risk ends once they have delivered the goods to the first carrier, at the place of shipment, at origin country, not the place of destination. Therefore, the risk is passed from the seller to the buyer at this point. Places, or points, of delivery and destination in CIP, two locations are critical: the place or point of delivery where the goods are delivered, this is where the risk is transferred, and the place or point agreed as the destination of the goods, as this is the point at which the seller is responsible for the cost to contract for carriage. It is advisable to identify both the point of delivery and the destination, as precisely as possible, in the contract of sale. Mode of transport and who pay for the freight in CIP. Carriage and insurance paid to is used in all modes of transport, that is, by land, rail, air, and sea. The seller is responsible for the cost of the carriage until the goods reach the named place of destination. Who pay for the insurance in CIP? Under the CIP rule, the seller must contract the maximum insurance cover under Institute Cargo Clauses A, for the buyer's risk and provide the buyer's insurance document if it must claim under that insurance. Note, in those destination countries that require the buyer to purchase insurance locally, the parties should consider selling and buying under CPT, carriage paid to. Sellers and buyers' obligations, costs, and risks. The Incoterms rules cover these areas of obligations, risk, and costs in a set of 10 articles, numbered A1 B1, etc., the A articles representing the seller's obligations, and the B articles representing the buyer's obligations. In Incoterms 2020, the internal order within each Incoterms rule now follows the sequence: A1 B1 General Obligations. A1. General Obligations, Seller. In every one of the 11 rules, the seller should provide the buyer the commercial invoice as specified in the contract of sale, and some other proof of conformity, for example, an analysis certificate or weighbridge certificate, and so forth, that may be relevant and indicated in the contract. The guidelines also give that any report can be in paper or electronic form as consented to in the contract, or assume the agreement did not mention any of this, then it is standard. The rules don't define what electronic form is. It very well may be anything from a PDF record to blockchain or some configuration yet to be created later on. B1 General Obligations, Buyer. In every one of the rules, the buyer should pay for the goods as expressed in the contract of sale. The rules don't indicate when and how the buyer should make the payment. However, it can be paid before shipment, after shipment, or 30 days credit terms, via telegraphic transfer to the seller's bank, or under a letter of credit. The contract should specify the payment terms. A2B2, Delivery, taking delivery. A2. Delivery, Seller. The seller delivers the goods to the carrier, on the agreed date or within the agreed period, under the A4 article on the carriage. Most importantly, delivery occurs when the seller passes the goods to their carrier to transport them, not when they reach the destination. B2. Taking delivery, Buyer. The buyer must take delivery when delivered to the seller's carrier, and physically receive them at the named place, or point within that place, of destination. A3B3, Transfer of Risks. A3. Transfer of Risks, Seller. In all the rules, the seller bears all risks of loss or damage to the goods, until they have been delivered under the A2 article on delivery described above. The exception is loss or damage in the circumstances described in the B3 article on buyer's risk, which varies depending on the buyer's role in the B2 article on taking delivery. B3. Transfer of Risks, Buyer. The buyer bears all risks of loss or damage to the goods once the seller has delivered them. If the buyer fails to inform the seller of the time and place of delivery as required in the contract, the buyer will bear the risk of loss or damage to the goods. A4B4, Carriage. A4. Carriage, seller. The seller must contract or procure a contract for the carriage of the goods from the agreed point of delivery, if any, at the place of delivery to the named place of destination or, if agreed, any point at that place. The contract of carriage must be made on usual terms at the seller's cost, and provide for carriage by the usual route in a customary manner, of the type normally used for the carriage of the type of goods sold. If a specific point is not agreed or is not determined by practice, then the seller may select the point of delivery, and the point at the named place of destination that best suits its purpose. The seller must comply with any transport-related security requirements, for the whole of the transport to the destination. B4. Carriage, buyer. The buyer has no obligation to the seller to arrange a contract of carriage. A5B5, insurance. A5. Insurance, seller. The seller must arrange a contract of insurance, at its own cost to cover the buyer's risks. This cover must be of the level provided by clauses A, of the Institute cargo clauses or similar, depending on the mode of transport used, often referred to generally as all risks as it covers all manner of risks with specific exclusions. If required by the buyer, the seller must arrange additional cover at the buyer's cost. The insurance must cover, at a minimum, the price agreed in the contract plus 10%, that is, 110%, and shall be in the currency of the contract. It must cover the goods for at least the duration from the point of delivery described in the A2 article on delivery to the named place of destination. The seller must give the buyer a separate contract, or a certificate under an existing policy giving the shipment details, to enable the buyer, or anyone else having an insurable interest in the goods, to claim from the insurer. This document usually shows the seller as the insured. It is then endorsed by the seller on the back of the originals, in blank or with a specific endorsement. The seller must also provide the buyer, at the buyer's request, risk and expense, with information that the buyer needs to arrange any additional insurance. B5. Insurance, buyer. The buyer is not obligated to buy additional insurance, even if there's the risk of loss or damage to the goods from the delivery point. However, the buyer must provide the seller, if it requests, with any information it needs to arrange any additional insurance, requested by the buyer under the A5 article on insurance. For example, the seller might need to know the location of the destination warehouse, so its insurer can assess the risk and levy an appropriate premium. A6B6, delivery, transport document. A6. Delivery, transport document, seller. The seller must provide the buyer with the usual transport documents, for the transport contracted in the A4 article on the carriage, if customary or the buyer requested it, and at the seller's cost. As CPT and CIP cover any mode or modes of transport, what form that document of transport takes will be dependent on the modes used. If the modes include carriages by sea, such as in FCL or LCL transactions, it is usual for the seller to obtain a sea waybill or bill of lading. Suppose the latter is issued in a negotiable form and several originals. In that case, a complete set of those originals must be presented to the buyer, sometimes through the seller's bank to the buyer's bank under a letter of credit. If the mode includes the goods going by air, an air waybill will typically be issued. If requested, the seller will be given one original for shipper, but this is not a negotiable transport document. Shipment by truck might involve the issue of a CMR in Europe or simply some form of consignment note or truck waybill, and these two are not negotiable. Finally, shipment by rail will usually be covered by some form of rail consignment note that is not negotiable. The transport document must cover the movement of the contracted goods, within the agreed period for shipment. If it is agreed, this document must enable the buyer to claim the goods from the carrier at the named place of destination. This would usually be in the form of a negotiable bill of lading. B6. Delivery, transport document, buyer. The buyer must accept the transport document provided by the seller so long as it conforms with the contract. A7B7, Export, Import Clearance. A7. Export Clearance, Seller. This rule, like all the multimodal rules, is suitable for both domestic and international transactions. Where applicable, the seller must, at its own risk and expense, carry out all export clearance formalities required by the country of export, such as licenses or permits, security clearance for export, pre-shipment inspection, and any other authorizations or approvals. The seller has no obligation to arrange any transit, import clearances. However, if the buyer requests, the seller must assist in obtaining any documents, or information that relate to formalities required by the country of transit or import. Those documents are permits or licenses, security clearance for transit, import, pre-shipment inspection required by the transit, import authorities, and any other official authorizations or approvals. B7. Import clearance, buyer. Where applicable, the buyer must assist the seller at the seller's request, risk, and cost in obtaining any documents or information needed for all export-related formalities required by the export country. Where applicable, the buyer must carry out and pay for all formalities required by any country of transit and the country of import. These include licenses and permits necessary for transit, import licenses and permits required for import, import clearance, security clearance for transit and import, pre-shipment inspection, and any other official authorizations and approvals. They are the buyer's responsibility because they occur after delivery by the seller. At first glance, it might seem strange that both seller and buyer have responsibility for pre-shipment inspections. However, to clarify, the seller is responsible for the country of export requirement, and the buyer is responsible for the country of transit, import requirement. A8B8, Checking, Packaging, Marking. A8. Checking, Packaging, Marking, Seller. In all rules, the seller must pay the costs of any checking operations necessary for delivering the goods, such as checking quality, measuring the goods and packaging, weighing, counting the goods, and packaging. The seller must also package the goods at its own cost, unless it is usual for the trade of the goods that they are sold unpackaged, such as in the case of bulk goods. The seller must also consider the transport of the goods and package them appropriately. B8, Checking, Packaging, Marking, Buyer. In all rules, there is no obligation from the buyer to the seller regarding packaging and marking. However, if the buyer needs certain specific labels, logos, or markings, they must provide them to the seller. A9B9, Allocation of Costs. A9. Allocation of Costs, Seller. The seller must pay all costs until the goods have been delivered under the A2 article on delivery. Other than those costs payable by the buyer, under the B9 article on the allocation of costs. Transport costs resulting from the contract of carriage, including costs of loading the goods and any transport-related security, must be paid by the seller. In addition, the cost of providing the buyer proof of the goods being delivered is also for the seller. If the contract of carriage includes unloading at the agreed destination, the seller must pay these. Additionally, any costs of transit included in the contract of carriage must also be paid by the seller. The seller must pay any costs involved in providing the usual delivery and transport documents, proving that the goods have been delivered. The seller must pay any costs, export duties, and taxes, where applicable, related to export clearance. The seller must pay the costs of insurance. If the seller requests the buyer to provide information or documents related to export clearance or insurance, the seller must pay the buyer for these costs. B9. Allocation of Costs, Buyer. The buyer must pay the seller all costs relating to the goods from the time they have been delivered under the A2 article on delivery. Other than those payable by the seller under the A9 article on the allocation of costs. Suppose the buyer has requested the seller to obtain information or documents needed to effect import formalities. In that case, the buyer must reimburse the seller's costs. Where applicable, the buyer must pay any duties, taxes, and other costs for import clearance. The buyer must pay for unloading costs unless the seller paid them under the contract of carriage. For any other cost not paid by the seller in the contract of carriage, the buyer must pay for it. A10B10, Notices. A10. Notices, Seller. The C rules, as we have seen before, involve two distinct points. This is reflected by the requirement that the seller must give the buyer notice that the goods have been delivered under the A2 article on delivery, and any notice the buyer will need enabling the buyer to receive the goods. This will usually be detailed in the contract, such as by a simple email or copies of shipping documents emailed to the buyer. B10. Notices, Buyer. If the parties agree in the contract that the buyer is entitled to determine the time for the seller to deliver the goods, and possibly, more importantly, the point within the named place of destination, where it will receive the goods, the buyer must give the seller sufficient notice. The contract will usually detail how much notice is to be given, and this might vary with the modes of transport. Recap. Carriage and insurance paid to, is when the seller pays freight and insurance, to deliver the goods to a seller-appointed party at an agreed-upon location. The risk is transferred from the seller to the buyer when goods are delivered, to the first carrier at the place of shipment. However, the seller is responsible for the cost of carriage and insurance coverage from delivery to the agreed destination. Under CIP, the seller is obliged to insure goods in transit for 110% of the contract value. And the seller must obtain insurance cover complying with Institute Cargo Clauses A, for the buyer's benefit, which means the seller will have to pay a higher premium. Previously the minimum insurance was under Institute Cargo Clauses C. Thank you for watching, and I hope the information provided in this video gives you a better understanding of the Incoterms rule for CIP. Do drop me your comments and let me know your thoughts. Coming soon, DAP, Delivery at Place. To be the first to watch the next video, please subscribe to my channel and click on the notification bell. Goodbye. From your trusted shipping guide. Revisit.